earnings season winding down, but we still got big names reporting. NIO, Best Buy, JM Smucker, all out before the bell tomorrow. Joining me now for the trade in today's earnings exchange is Jeff Kilberg, KKM Financial CEO and a CNBC contributor. Hey, Jeff, let's kick things off with NIO. Shares higher ahead of the print, but taking a hit this month, falling about 28%, despite doubling deliveries in July compared with a year prior. The street's going to be keeping an eye on ramping competition and a sluggish Chinese economic recovery. Speaking of competition, another Chinese EV startup, also in the headlines today, XPeng, says it'll buy Didi's smart electric car development business in a $744 million all-stock deal. Jeff, you say the bad news has been priced into NIO. Maybe it'd be doing better if its name were VinFast.
That's a great point, John, but I want to be a buy here of NIO. And yes, you're absolutely right. We are seeing nearly 20% drop in just the last month. Yes, it's up 11% year to date, but it's had so much to grapple with. It's in reaction to lower margins due to Tesla cutting prices. But when you think about the EV market, 60% of it comes out of China. So I think there's exposure here, and you can own this directly in NIO or PGJ. That's the Golden Dragon Index ETF, where there's about a 5% position into NIO in that ETF. But I think at the end of the day, when you look at the way it's going to move higher, technically it has support at the 200-day moving average just down at 10. But I think if it gets back above its 50-day moving average at 1135, it could go back to where it was a year ago at 16, 17, 18. That's 50% higher.
Okay, so I don't want to confuse anybody with this introductory video here. This is obviously not a current analysis of this stock. As we can see in some of the prices, the stock is trading close to $11. So this analysis here that this investor is talking about would have come from about 11 months ago, almost a full year ago. And the reason that I'm playing this is because I wanted to sort of revisit some of the arguments or some of the bullish thesis points which were being made about a year ago, so that we can sort of reassess them and see what worked and what didn't for this stock. So there are a couple of key points that are being made here. He is sort of focusing on some of the bullish argument here. But one of the points that I do want to point out here is the fact that he's the weaknesses that are present in his technical analysis, because he's only focusing on moving averages alone. We do focus on moving averages here in this analysis, but it's only one piece of the puzzle. There are also many historical support and resistance zones, Fibonacci retracements and extensions and things like that. And I just wanted to point out that I do think that his analysis from a technical perspective is a bit weak. But at the same time, I do want to mention that the reason I'm pointing out this video is because I do feel that a lot of the same fundamental arguments still remain intact. So I thought that we could just listen to the remainder of his points here, and then we can get back to the current technical analysis for this stock.
So I think a lot of the bad news is priced in NIO, and I think if you want exposure, as we really had a hard time measuring. Any asset manager, money manager out there has had a very difficult time measuring the reboot out of China and the zero COVID ramifications. This is why it's priced in. That's why it's down 45% over the last year, and that's why I want to be a buyer here from a trade perspective, but also, John, from a longer-term exposure to the Chinese EV market.
So mostly I found this video interesting because I thought it was interesting to see how people were looking at this stock roughly 1 year ago. And so that we could sort of reassess the outlook here and determine, which ideas worked and which didn't, and which wound up leading to unprofitable investments over time. So overall, I think that what should be noted here is the fact that anybody that's been trading the stock for quite a while is not alone in that position. There were many of these big names on Wall Street that were doing the exact same thing. Many people that got into these stocks at higher levels. And we're quite bullish on these stocks, at $10 or $11 per share. Obviously now, we've moved below. We've actually dropped below the $4 mark in recent trading sessions here. But if we just listen to that analysis, that person was fully expecting to see the stock go to $17 or $18 relatively quickly, and to have fairly substantial gains in the stock with limited downside. As we can see here, the stock has easily lost more than half of its value since then. So if we sort of reassess this situation from a fundamental perspective and sort of revisit which ideas worked and which ideas didn't, from my perspective, it's not the fundamentals that are the problem with that outlook. The main problem with that outlook would have been the basis on the technical analysis itself. Because here, we can see He brought up two moving averages. We do use moving averages on these charts. He brought up the 200 period exponential moving average, which is this blue line here, and the 50 period exponential moving average, which is the orange line here. So, there's nothing wrong with looking at those moving averages, and they are probably the two most common moving averages that are used in the entire market. But I do think that there are flaws with technical analysis when people base their decisions and trading information on such a small number of technical signals. When we're doing this analysis here, we're always looking for technical analysis signals to work in conjunction with one another. Ideally, what we would really like to see would be to see three technical analysis signals working together. If you watch my other videos, you would know that I rely heavily on Fibonacci analysis as well. I haven't really been able to do that as much with NIO because there are not many current price moves that really would allow for it. For example, we can look at this price move here, and we're already through the 786 retracement. We're already through the 78.6% retracement of this prior trending move here. The problem with Fibonacci analysis with this stock in particular is just the fact that we don't have very many near-term moves that really sort of lend itself to that type of analysis. But even still, we always use 4 exponential moving averages, and then in addition to that, we would always be using historical support zones and then possibly trend lines in conjunction with those exponential moving averages. So the reason I wanted to bring up that point is because I think that many people got into this stock for the same fundamental reasons that person did. This investor from 11 months ago, he was very bullish on the name. Then he expected the stock to gain 50 or 60% with limited downside. But I think the problem with that viewpoint was the limited technical analysis approach that he was using. So for these reasons, I thought that it would be sort of useful to, one, go over the prior reasons, the basic fundamental reasons for owning NIO stock. Two, making it so that people understand that there were many big names on Wall Street that were also getting into this stock. So it shouldn't feel shameful or anything like that to be losing money in this position, because there were many very big names that were bullish on NIO far back in time. And then 3, I think that it was just important to point out some of the technical analysis flaws that had been used in some prior analysis pieces that were made very much publicly available and possibly influenced other people to buy the stock at those upper levels. So currently, we will continue to do the technical analysis strategies that are on the basis of multiple technical signals working in combination with one another, as this is the basis for our current outlook on this stock. So here's the weekend video update for NIO Incorporated, stock ticker NIO. Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.